Hello, hi guys. This is CA Balakrishna. How are you? Hope you people are doing well. Even I am fantastic. So from today onwards, we'll be starting revision of CA Inter Audit. So from today, daily I'll be uploading one revision class for each chapter. So the purpose of these revision classes is, of course, to help you people to revise the entire chapter in as much as minimum time as possible. Now, is this revision classes useful for the students who haven't uh, learned or who haven't heard to regular classes for CA Inter? See, basically, if you already have knowledge about audit, then for the purpose of revision, you can use this revision classes. But if you are first time listener of audit subject, then I wouldn't suggest these revision classes for you people. Better you go for regular classes or fast track classes. And next, our revision classes, they will be from this chart book which I have prepared. Basically, in these summary charts, all the concepts of the entire chapter will be presented in the form of charts. None of the concept will be missed in this chart. Okay, even though these are summary charts, I haven't missed any concept. Each and every concept will be covering from these summary charts. And next, these summary charts, I am still preparing them. As and when I am uploading the revision class, I will be preparing the chart for each and every chapter. So by the time all the revision classes gets completed, this chart book will also be ready and I will make it available on our website. Okay, so that is about chart book. Now, if you don't have this chart book, you can also follow this class with the help of our CA Inter Audit Concise book. Okay, now, yes, without any delay, let us start revision of first chapter, which is nature, objective, and scope of audit. Basically, here in this first chapter, we will be seeing all the basic concepts. Like, first, what is the origin of audit? Where did the origin of audit has arise from? First of all, in 4th century BC, Kautilya's Arthashastra. It is a book that is written by Kautilya. It has made a reference to audit. And next, the term audit was derived from a term which is audaire. The meaning of the term audaire means to hear. Basically, in the previous, in olden days, auditors, they used to listen the accounts that are read by accountants. So the term audaire means to hear, and from that term the term audit is derived. And next, coming to India, the first auditor general in India is appointed in 1860, that is during British time. So this auditor general is nothing but present day comptroller and auditor general is there na. He is none other than the auditor general. So the comptroller and auditor general of India presently, who is having a task of auditing all the government entities. This we will be discussing in government audit, that is in audit of different types of entities. There is one particular concept known as government audit, right? There we will be learning about this comptroller and auditor general of India, C&AG. Next, to regulate this profession of chartered accountancy, which does the auditing, a particular body by name ICAI, Institute of Chartered Accountants of India, has been established for the purpose of regulating this entire profession of chartered accountancy. So this is a brief about origin of audit. Next, meaning of audit. What is meant by audit? What is the definition for audit? First of all, audit is independent examination of what? Of financial statements. Now here, what is meant by independence? See, independence means your decisions not being subordinate to the wishes or will of some other person. That is known as acting independently. You should not be influenced by any other party while taking the decisions. That is known as independence. So audit means independent examination of financial statements. Now, whether the entity is a profit oriented entity, that is business entity, or the entity is the non-profit oriented entity like charitable entity, in both the situations the audit is required. Okay, it is not that only for the businesses audit has to be done. Okay, so whether profit oriented or not, and whether small entity or a large entity, that is irrespective of size. Sir, our entity is a very small entity, will not get audited. No. If you are a company, you have to mandatorily get your books of accounts audited, whether you are a small entity or a large entity. Got it? So irrespective of its size or legal form, audit will be required. Next, view to expressing an opinion thereon. So why you are doing this audit? You are doing this audit for the purpose of expressing an opinion on the financial statements. So audit means a independent examination of financial statements, whether profit oriented or not, irrespective of size, with purpose of expressing an opinion thereon. Now, while expressing an opinion, what are some of the examples of points that the auditor will see? See, first of all, auditor will see whether books of accounts, the accounts, that is the financial statements, whether they are drawn based on the books of accounts or not. In fact, even in the audit report that the auditor gives at Companies Act also, auditor has to mention as per section 140 subsection 3 whether books of accounts are matching with the financial statements or not. That is one of the things that the auditor will see in case of audit. Next, he'll also see whatever the entries that are made in the books of accounts, are they having sufficient appropriate audit evidence. Okay, if there is no audit evidence, you should not enter that in the books of accounts. Like, so whatever the entry that you enter in the books of accounts, there should be appropriate document for that. Like, for every sale entry there should be sale invoice, for every purchase entry there should be purchase bill. Okay, like this, for each and every that you enter into the books of accounts, that should be having a sufficient appropriate audit evidence. Next, none of the entries should be omitted. That is completeness of all the entries. You should not omit any of the transactions. Next, information in the financial statements, it should be clear and unambiguous. That means the reader who is reading the financial statements, he should be able to clearly understand the financial statements. Next, the amounts that you present in the financial statements, they should be properly presented and disclosed and described. Basically, as per applicable financial reporting framework, you will prepare these financial statements, right? And the auditor will also see whether these accounts are they showing a true and fair view or not. These are example of some of the aspects that the auditor will see in case of audit, right? Next, after meaning of audit, why you should get your books of accounts audited? What are the benefits of getting books of accounts audited? Basically, in case of audit, what the auditor will do is, management, they have prepared financial statements. Auditor, by auditing those financial statements, he will give confidence to the users that users these financial statements, they are not having any misstatements. You can take your decisions based on these financial statements. Like this, auditor, he will give confidence to the users on the financial statements that are prepared by management. So one of the benefit of doing audit is to give confidence to the users. Next, in case of company, management is separate from owners. Owners, they will not go through the day-to-day business activities of the entity. Management, it will take care of day-to-day business activities. Now, owners, they require an independent mechanism who, on behalf of owners, will verify the transactions, the financials of the company. So, audit will help the owners as a independent mechanism. Next, audit will also act as a moral check on employees. See, if employees know that at the end of the year, auditor will come and he will go through all the books of accounts and transactions, and he will find out any frauds that we have conducted, then employees, they will fear that we should not do any frauds, right? So it will also act as a moral check on the employees. Next, for government, tax has to be paid. On which amount this tax will be paid? It will be paid on profit that the entity has made, right? Now, government, it should get a confidence that whatever the profit that the entity has shown, that is correct only, right? So, auditor, by auditing the books of accounts, he will say that yes, whatever the profit that the entity has shown, that is correct only for the purpose of determination of tax. Next, bankers to take a decision whether to give loan to this company or not. If you give loan to this company, whether this company will repay the amount or not, to take that decision also, it will depend on the audited financial statements. Next, of course, to detect frauds and errors, audit will help, right? So to detect frauds and errors. And another point, during the audit, auditor, he will review internal controls, right? Now, is it the responsibility of the auditor to review internal controls during the audit? No, it is not responsibility of auditor to review internal controls during the audit. But for the purpose of making his job of audit easy, he will review the internal controls. And during such review of internal controls, if at all he finds any deviations in the internal control, he will bring them to the notice of management. So you should remember that it is not the responsibility of the auditor to review internal controls, but for the purpose of making his job of audit easy. How? For the purpose of designing the audit procedure. We will understand this in 4th chapter. While understanding risk of material misstatement, we will understand this, why auditor will review the internal controls. So audit will also help to review the internal controls. So these are the benefits of internal control, right? Next, auditing, it is having relationship with various subjects. See, whatever the subjects that you read at your CA inter level or CA foundation level or CA final level, all of those subjects, they are having a relationship with the audit. So what are they? First of all, accounting, law means laws, those are related to business, economics, stats and maths. Data processing means how the systems, the information systems, the computers process the data that has been given as the input. Because auditor, when he goes for an audit in the organization, these days manual books are not maintained. Most of the organizations, 99.99% of the organizations, they have computerized their books of accounts. So auditor should also be well aware of the information technology, how this system is going to process the data. Next, financial management. Next, behavioral sciences. Why this behavioral sciences? See, during the audit, auditor has to communicate with the various people of the organization for the purpose of gathering information, for the purpose of gathering evidences. So, for properly communicate with them, auditor should know about behavioral sciences, how the other people will behave, and with respect to production and manufacturing activities. So, the subject of auditing is having the interrelationship with all these subjects. Got it? Next, is the audit mandatory or voluntary? See, it depends. If you are a company incorporated as per Companies Act 2013, audit is mandatory. Or if you are just a partnership firm, then audit is not mandatory. Or as per Income Tax Act, there is the provision related to tax audit. If your turnover crosses 1 crore rupees, then tax audit becomes mandatory, right? And next, some organizations, even though audit is not mandatory, for the purpose of getting or enjoying the benefits of audit, they will get their books of accounts audited. So you cannot say that audit is mandatory or voluntary. You have to see the situation and decide. So audit is not always mandatory, but in case of companies, it becomes mandatory, and tax audit as per thresholds. Next, some schools or some charitable organizations, for the purpose of getting grants from the government, they will get their books of accounts audited, because government will say that, see, you prove me that your activities are charitable activities. Whatever the amount that I will give you, you utilize that for charitable activities only. So like this, you get get your books of accounts audited. See, sometimes what happens is, government, if it is giving grant of some 10 crore rupees, it will not give entire 10 crore rupees at a time. First, it will give 1 crore rupees. Then it will ask the school or the charitable organization after giving 1 crore rupees, you get the books of accounts audited by the chartered accountant and prove me that this 1 crore rupees you have utilized only for the charitable activities only. Then I will release another 2 crores. Okay, you prove me this also. Next, I will release another amount. Like this will happen in case of charitable organization. So for the purpose of getting grants, the charitable organizations or schools, they will get their books of accounts audited, and some entities for the purpose of getting advantages of audit, they will get their books of accounts audited voluntarily. Next, who will appoint the auditor? For the purpose of conducting audit, someone has to appoint the auditor, right? In case of companies, shareholders, that is members, will appoint the auditor. In case of government companies, C&AG, Comptroller and Auditor General of India, will appoint the auditor. We will discuss about this in detail in 11th chapter, that is audit of different types of entities. Next, in case of partnership firm, of course partners will appoint the auditor, right? So this is with respect to appointment of auditor. Next, in the first chapter itself, we have discussion with respect to SA-200. Basically, these standards on auditing will be almost all the standards on auditing will be discussing in our syllabus, right? So in the first chapter, we have discussion with respect to SA-200, which is the basic standard. This standard, it forms base for all other standards. What is the name of this? SA-200. Basically, SA-200, it deals with overall objectives of independent auditor and conduct of audit in accordance with standards on auditing. So basically, SA-200, it deals with what are the objectives of auditor. See, this SA-200, it deals with two aspects. Firstly, what are the objectives of auditor? Next, what are the requirements on the part of auditor? That is, what are the qualities of auditor and what are the duties of auditor? So first of all, we will see what are the objectives of independent auditor. This line, you should remember it by heart. What is that? The objective of auditor is to obtain reasonable assurance that financial statements as a whole are free from material misstatements, whether due to fraud or error, thereby enabling the auditor to express an opinion on whether financial statements have been prepared as per applicable financial reporting framework or not. This line you should be able to tell even if you are asked after waking up from the sleep. Okay, even in the middle of the sleep, if someone wakes up you and asks what is the objective of auditor, you should be able to tell this line. This is that much important. Got it? Now in this line, there are certain terms that we need to understand. The first term is reasonable assurance. What is meant by a reasonable assurance? First of all, assurance means giving confidence to the other party is known as assurance. Now, what is meant by reasonable assurance? Basically, there are three types of assurances. First one is the absolute assurance. Absolute assurance means you give 100% confidence to the other party that there are no material misstatements in the financial statements. You should remember that auditor will never give a absolute assurance. Okay, he can ever give a absolute assurance, 100% confidence, because of the inherent limitations of the audit. What are the inherent limitations? We'll see. Okay, now next one is reasonable assurance. Now this reasonable assurance is a high level of assurance, but not absolute assurance. Okay, now auditor, in the audit, he will always give reasonable assurance only. Okay, so reasonable assurance is a high level of assurance, but not absolute assurance. Next, we have limited assurance. Now, this limited assurance will be given by auditor in case of limited review. Now, the level of assurance that the auditor will give in case of limited assurance is lesser than the reasonable assurance. Now, here, for the purpose of obtaining reasonable assurance, auditor will perform almost all the audit procedures. Whereas, in case of limited assurance, since he has to obtain only some assurance, he will not perform all the audit procedures. He will only perform some of the audit procedures that are sufficient for obtaining limited assurance. That is the difference between reasonable assurance and limited assurance. In both the situations, auditor will perform audit procedures only, but amount of audit procedures that the auditor will perform will differ. Okay, in case of reasonable assurance, auditor will perform almost so in case of reasonable assurance, auditor will perform almost all the audit procedures. Whereas in case of limited assurance, auditor will perform only some audit procedures that are sufficient for the purpose of obtaining limited assurance. Okay, this we'll call it as a review. If auditor is giving limited assurance, we'll call it as review. If auditor is giving reasonable assurance, we'll call it as audit. Got it? Yes. So that is the first term, which is reasonable assurance. Next term, what is meant by material misstatements? See, misstatement. What is meant by misstatement? Misstatement means something wrong, right? But what is the official definition? There are four things which you need to remember: amount, classification, presentation, disclosure. Shortly, we'll call it as ACPD: amount to classification, presentation, disclosure. Now, ACPD that is made by the management in the financial statements is different from the ACPD that is required as per the applicable financial reporting framework. Then we'll call it as a misstatement. And if that misstatement is material as per SA-320, we'll call it as material misstatement. Got it? So that is the material misstatement. Next, fraud and error. You already know. Error means unintentional mistake. Fraud means intentionally you have committed the fraud. Right? Next, applicable financial reporting framework. What is this applicable financial reporting framework? First of all, financial reporting framework means certain benchmark as per which you will prepare your financial statements. Let's say, for example, accounting standards. Indian accounting standards, these are nothing but financial reporting frameworks. As per these financial reporting frameworks only, you will prepare your financial statements, right? So, examples for applicable financial reporting frameworks are accounting standards and Indian accounting standards. Now, these financial reporting frameworks, they are of two types. What are they? First one, fair presentation framework. Second one, compliance framework. Now, what is the difference between fair presentation and compliance framework? See, generally, if the financial reporting framework is given, you will comply with that financial reporting framework. But if in that financial reporting framework, if explicitly or implicitly it is mentioned that in order to achieve more fair presentation, if you wanted to give more disclosures than required by the applicable financial reporting framework, you can give. Okay, the financial reporting framework is permitting the users, the preparers of financial statements, to give more disclosures than required by the applicable financial reporting framework. Or the applicable financial reporting framework is also permitting the management to deviate from the requirements of the financial reporting framework to achieve more fair presentation. If these two are there in any financial reporting framework, you can call it as fair presentation framework. If these two are not there in the financial reporting framework, that means financial reporting framework says that you have to strictly comply with the requirements of this financial reporting framework, then we will call it as compliance framework. So these are the two financial reporting frameworks. Next, going to qualities of auditor. What are the qualities that the auditor should have? First of all, ethical requirements. There are 5 ethical requirements that are issued by Code of Ethics, issued by ICAI. Basically, our ICAI, it has issued Code of Ethics. That Code of Ethics is this much volumes of books. There are some 2 or 3 volumes of Code of Ethics. Now, in that Code of Ethics, 5 ethical principles have been prescribed. What are those 5 ethical principles? Let us see. Fundamental principles as per Code of Ethics. First one, integrity. What is meant by integrity? Integrity means being truthful, being honest. That means whatever is actually there, you should report that only. You should not get yourself associated with any false information. That is known as integrity. Next, objectivity. What is meant by objectivity? Basically, objectivity is related to decision making. You can take decision either subjectively or objectively. Subjective decision making means based on your emotions you are taking the decision. Should you take your decisions based on emotions? No, auditor should never take the decisions based on emotions. Instead, his decision should be objective. That means based on facts. Okay, objectivity means decision making based on facts. Got it? Next, confidentiality. Now during the auditor, he will get access to various confidential information of the entity. Now auditor should not disclose this confidential information to any other party. Got it? Next, professional behavior means behave professionally. That's it. Next, professional competence and due care. Professional competence means whatever the work that you accept from your client, you should be having knowledge to do that work. Only if you have knowledge to do the work, you should accept that work. Otherwise, you should not accept that work. That is known as a professional competence. And while exercising or while executing the work, you should take utmost care. That is due care. Got it? So those are the ethical requirements. 5 fundamental principles. Next quality of the auditor is professional judgment. What is meant by professional judgment? While taking any decision, you should apply all your past experience. You should apply all your knowledge that you have obtained while reading various books and listening to various classes like this. Okay, so professional judgment means while taking the knowledge, application of all the experience, while taking the decision, application of all the knowledge and all the experiences is known as professional judgment. Next, independence. We have already discussed what is meant by independence. Your decisions should not be biased. You should not get influenced by any third party. Next, professional skepticism. What is meant by professional skepticism? Professional skepticism means questioning mind, having questioning mind. You have to question everything during the audit, and you should also be alert for any misstatements that you might find during the audit. So this is a professional skepticism and professional judgment. Got it? So these are the two things that will be dealt by SA-200. What are they? Firstly, objectives of auditor. Next, requirement on the part of auditor. Another requirement is like duties that the auditor has to discharge. First duty is he needs to obtain sufficient appropriate audit evidence. Next, he needs to conduct audit in accordance with standards on auditing. Okay. Now, if auditor is not able to achieve this objective of reasonable assurance, what the auditor will do? Auditor, see, what if auditor fails to achieve the objective? Then he will see whether giving qualified opinion is sufficient in this situation. If qualified opinion is sufficient, then that is fine. He will give qualified opinion. If qualified opinion is not sufficient, he will check whether he has to disclaim the opinion or he needs to withdraw from the engagement. What is this qualified opinion, disclaimer of opinion, adverse opinion? All these things we will see while discussing yesterday 700 series, that is in the reporting chapter we will understand. So this is SA-200 as part of chapter number 1. Next, we have just discussed that auditor, he can never give absolute assurance. Why auditor cannot give absolute assurance? Because there are inherent limitations in the audit. That means there are certain disadvantages in the audit itself. So because of those inherent limitations, auditor can never give absolute assurance. So what are the inherent limitations of the audit? First of all, nature of financial reporting. The nature of financial reporting itself is such that while preparing the financial statements, whose responsibility it is to prepare financial statements? Management. Right now, while preparing the financial statements, management, they will take various judgments, they will take various assumptions, they will make various estimates. Now all these are related to future. Like if you are providing provision for bad debts, this is a provision for bad debts that might occur in the future. Now you never know whether the provision amount that you have provided will be equal to the actual amount of bad debt, right? So this is one of the limitation of the audit. So if management itself doesn't know whether the amount that they have presented in the financial statements will actually occur or not, how can the auditor identify all the frauds and errors, right? So this is one of the limitation of audit, because of which auditor can never give absolute assurance. Next, inherent limitations of internal control. Even the internal controls in the organization also has certain inherent limitations. See, internal controls, they will be implemented for the purpose of identifying the frauds, prevention, detection, correction of frauds and errors. But they cannot prevent, detect, correct 100% of frauds and errors because of their limitations. So because of the limitations of internal control also, auditor cannot give 100% assurance. This is also one of the limitation of audit. Next, nature of audit procedure. See, in case of auditor, he will use sampling. Sampling means he will not perform audit procedures on all the items. He will take certain sample. On that sample, he will perform audit procedures. So, since he is not auditing all the items, he cannot identify all the frauds and errors. This is also one of the inherent limitation. Next, management may not provide complete information. Okay, see, during the entire year, it is the management who will be with the entity. Auditor, he will just come at the end of the year. So, all the information about the entity should be known to the management. And what is the guarantee that management gives 100% complete information to the auditor? This is also one of the inherent limitation. Auditor, he can just ask the management, give me the information. But it is up to the management whether they will give complete information or not, right? Next, concealing the fraud. See, the purpose of auditor is to identify any frauds or errors. But the person who is committing the fraud, will he commit the fraud and he will just open it and keep it like that for the auditor to identify the fraud? No, he will take appropriate steps to conceal the fraud that he has committed. Okay, the person who has committed the fraud never wanted to be caught, so he will conceal it. He will conceal the fraud. This is also one of the limitation of audit procedure. Okay, so because of these reasons, the auditor cannot give absolute assurance. Next, you should remember that audit is not an investigation to deeply dive into each and every matter. Okay, so this is also one of the inherent limitation of audit. Next, timelines of reporting. See, there is a limited time available for the auditor to conduct the audit. In case of banks, if you see, there is just 2 to 3 days for the auditor to do the audit of each branch of the bank. Then in such a situation, how can the auditor can find all the frauds and errors in such a limited time given? So this is also one of the inherent limitation. Next, future events. In the financial statement, there will be various future events, just like I told you, provision for bad debts. So it is not known to management itself whether that amount will actually occur or not. So how can auditor accurately predict? So this is also one of the inherent limitations of audit. So because of these reasons, auditor cannot give absolute assurance. Next, coming to scope of audit. What will be included in the scope of audit? What will be excluded in the scope of audit? First of all, auditor, he will have to cover all the aspects of entity that will be included, and he should also check whether the financial information that is submitted to him by the management is reliable and sufficient or not, right? Next, he has to see whether proper disclosure of all the financial information is given in the financial statements or not. Next, what is out of the scope of auditor? First of all, preparing financial statements is responsibility of the management, so preparing financial statements is out of the scope of auditor. Next, duties that are falling outside the domain of his competence. Let's say, for example, an auditor is asked to check whether we can use this building for next coming 100 years. That is, what is the stability of this building? Can auditor check this? No, auditor can never do this, because auditor is not having knowledge to perform these type of activities. Okay, that activity it can be performed by respective engineer. He can verify the building and he can give certificate about stability of the building, right? So those activities that are outside the scope of auditor are also that are outside the competence of the auditor are also not included in the scope of auditor. Next, authentication of documents. See, authentication of documents means management have given you a bank fixed deposit certificate. Now auditor, he cannot verify whether this certificate is original document or a fake document. Management has created a fake document. Auditor is not having knowledge to do the type of analysis, okay, that can be done by forensic experts. Okay, forensic experts can tell you whether the document is fake or real. So authentication of documents is also out of the scope of audit. Got it? Next, what is the difference between audit and investigation? First of all, audit, in case of audit, you will provide reasonable assurance on the financial statements. We have seen the definition and we have also seen the objective as per SA-200. Whereas in case of investigation, it will critically examine accounts. Critically examine accounts means it will go in depth into each and every account investigation. Okay, it will take a particular matter and it will go in depth into that particular matter. And in case of audit, outcome is opinion. Auditor will give opinion on entire financial statements. Whereas in case of investigation, the outcome is fact finding. Okay, the investigation will reveal certain facts like who committed fraud, what is amount involved in the fraud, from how much time the fraud is being conducted. These kind of facts will be found out from investigation. And the scope of audit is general and broad, whereas scope of investigation is narrow and specific. Okay, investigation focuses only on the area where the fraud has occurred. Got it? Yes. Next, audit versus review. What is the difference between audit versus review? In case of audit, auditor will give reasonable assurance. In case of review, auditor will give limited assurance. We have discussed, right, what is meant by limited assurance and reasonable assurance. We have discussed. Next, procedures that are performed in the audit are almost all the procedures. Extensive procedure will be performed, whereas in case of review, fewer procedures will be performed. Next, audit deals with financial statements. Even review also deals with financial statements only. Okay, yes. Next, elements of assurance engagements. What are the elements of assurance engagement? First of all, engagement. What is meant by engagement? It is not something that will happen before the marriage. No, engagement means if auditor takes any work, you can call it as engagement. Okay, if auditor takes any work from the client, you can call that particular work as engagement. Auditor, he can perform various engagements. Right now, the elements of these assurance engagements, let us see. So first of all, there will be three parties to the assurance engagement. Who are the three parties to the assurance engagement? First of all, the person who is providing the assurance, that is practitioner, he will provide the assurance. Next, the person who has prepared the financial statement, that is responsible party. In case of financial statements, responsible party will be management. Okay, so second party will be responsible party, and the third party is the users of the financial statements. So intended users. These are the three parties of assurance engagements. Next, subject matter. What is meant by subject matter? The item that you are going to audit, or the item on which you are providing the assurance, is nothing but subject matter. In case of audit, you will provide assurance on financial statements. So financial statements are subject matter. Got it? Yes. Next, suitable criteria. What is meant by suitable criteria? The benchmarks as per which you will prepare the subject matter is known as suitable criteria. In case of financial statements will be prepared as per accounting standards, Indian accounting standards. So accounting standards, Indian accounting standards, they are nothing but suitable criteria. Okay. Next, sufficient appropriate audit evidence. You should obtain sufficient appropriate audit evidence. This is also one of the element of assurance engagement. Next, finally, you will give assurance report, which is a fifth element of assurance engagement. Next, who have issued auditing standards? Of course, ICAI, right? Now, just like ICAI has issued auditing standards, it has also issued various other standards. We will see what are the other standards that are issued by ICAI. First of all, auditing standards. Why these auditing standards will be used? These will be used by the auditors for the purpose of auditing historical financial statements. See, here this term historical financial statement is important because there is also prospective financial statements. Okay, auditing standards doesn't deal with prospective financial statements. Prospective financial statement means historical financial statements will contain the transactions that has already happened. The past transactions will be there in the historical financial statements. Whereas in case of prospective financial statements, future transactions will be there, like projections or nothing but prospective financial statements. Okay, so these prospective financial statements will be prepared based on various assumptions and estimates. Okay, So some of the examples for auditing standards are SA-200, SA-210, all the standards that we are going to discuss in our syllabus. Next, standards on review engagement. What is meant by review? Just now we have discussed limited. Review engagement is nothing but an engagement in which auditor will provide a, or practitioner will provide a limited assurance, is known as review engagement. There are also standards for review engagement issued by ICAI, which are nothing none other than SRE series. Okay, SRE 2400, it deals with review of historical financial statements. SRE 2410, it deals with review of interim financial statements. Interim means for every 3 months or 6 months you will prepare a financial statement. That will be interim financial statements. Next, standards on assurance engagement. Now you can get it out, sir. In case of audit also, auditor is providing assurance, right? And you are telling there are other standards saying standards on assurance engagement. What is the difference between standards on auditing and standards on assurance engagement? In case of standards on auditing, auditor will provide assurance on historical financial statements. In case of standards on assurance engagement, auditor will provide assurance on items other than historical financial statements, like assurance on internal controls, assurance on pro forma financial statements, assurance on prospective financial statements. Okay, so on whatever the item other than historical financial statements, if auditor provides the assurance, that is confidence, you can call them, you can you have to apply standards on assurance engagement. In such a situation, we have SAE 3400, which deals with providing assurance on pro forma financial information. SAE 3410, which deals with assurance on prospective financial information. Next, standard on related services. See, apart from accepting the assurance engagement, the auditor will also accept related services like consultancy services or income tax return preparation services or compilation of financial statements. All these will also auditor will accept. So in those situations, standard on related services should be applied. Okay. So SRS 4400, SRS 4014, these are some of the examples. Basically, all these standards are there. Na? This SRE series, SAE series, and SRS series, all these 3 series we will discuss at our final level. At our inter level, we only have standards on auditing. Okay. Next, standard on quality control. We are having this in our syllabus. SQC1 deals with ensuring system of quality control at the entire firm level. That is SQC1, standard on quality control. They will deal with maintaining quality in the firm, right? So these are various standards that are issued by our institute. Next, purpose of standards. What is the purpose of standards? First of all, to establish accepted benchmarks, the standards have been developed. And by following the standards on auditing, the financial reporting quality will increase, and it will also promote uniformity. Like whoever the auditor issues audit report in India on financial statements of Indian company, the format will be same. Okay, so uniformity can be achieved with the help of standards on auditing. Next, it will also equip professionals with skills. Professionals means we chartered accountants will acquire knowledge on how to do the audit by reading the standards on auditing, right? So standards on auditing will also help to acquire professional knowledge for doing the audit, and they will ensure quality. So this is the purpose of standards, and this is the complete discussion of chapter number 1, nature, objective and scope of audit. So that's it. If you have any doubts with respect to the discussion of this chapter, you can ask me in the comment section and I'll reply you. Yes, I'll be winding up this class as of now. We'll meet in the next class with the revision video of second chapter. Okay, take care, bye bye, see you.